You see the fast cars, the lifestyle, the idea of trading everywhere you want at any given moment in time. Of course, it's going to tap into us because it's sexy, it's appealing.
Real traders are not trading every day. Social media will tell you a different story. But the truth is, the less you trade, the more you will make.
Trading is a game of survival. And day trading in this manner, frequently, is not going to ensure your capability of survival in this game. 95% of traders lose money. That's not a made up fact, that's the actual real proven data from academic research to even the brokers themselves telling you. And one of the key characteristics of what 95% of those traders are doing is day trading. And that's the lie YouTube has predominantly been built on. The entire trading industry has been built around encouraging bad behavior, which is actually causing significantly more harm than benefit. And that's actually what's contributing to the metric we see on the board right here, which is the 95% losing. And yet no one speaks up about it. And the reason being is there is no financial incentive to do so. And what we're going to be breaking down in this video is, number one, the statistic on us behind the board. Number two, why day trading is pushed so aggressively. And finally, we'll break down a framework and some simple solutions on how to hopefully wake up to what's going on and simultaneously assist yourself in reducing your frequency of trades and understanding how to actually increase the probabilities of winning to finally escape this very tedious metric over here.
So we have spoken before about how 95% of retail traders lose, and we spoke about the technical side, but today we want to talk about something slightly different. And as Tori mentioned, the whole system of Forex crypto trading on YouTube, IG, social media in general is all geared up to make you lose. And there's a few different elements that contribute to that. So first off, let's look at this statistic here. A huge 97% of retail traders who traded every day over 300 days lost money. So that's day trading, consistently trading every day. 97% of them lost over a 300-day period. That is a huge amount of retail traders that lose, and show that it's nearly impossible, apart from that 3%, it's nearly impossible to be profitable as a day trader, trading every single day in this market.
So it's also worth mentioning that all of these points on the board are taken from academic research papers, studies, and various different tests that have taken place from 2020 to even previously, and that's all from different countries, etc. The reality is, looking at all of the data here, less than 1% of traders are able to consistently net positive when day trading continuously over time. Once again, 99% are losing to the 1%. This was actually taken from real research, and brokers themselves, which you guys will see from exchanges to brokers, they disclose 70 to 95% of traders lose. They're legally obliged to disclose that information. So none of this is fake. This is real factual data.
Yeah.
The question is, the first thing we need to look at here is, what are the 95% doing wrong? And what are the majority of traders doing? And what is predominantly pushed to traders, whether that's newcomers or even experienced traders? The reality is, most of these 95% are day trading. Now, this is where we need to look at this and understand, first of all, why this is contributing to more losses. Now, trading, it's no secret, is not easy. It can seem easy, it can be made to look easy, which is what we'll get to in the second part, but it's not. And it's a game of probabilities, and a game where the more you enter, the more you participate, the probabilities are going against you. It's marketed as something to do every single day, to do several times a day, if not hundreds of times a day, to increase your chances of winning. And because there is an association of more trades equals more money, that's what most traders tend to end up doing. But the reality is, and the data shows, they end up losing more money over time. So when you look at these statistics here, it also shows there is a linear relationship between trade frequency and trade underperformance. And using a quick graph that we drew ourselves, it's very simple. The more you trade, there is a higher probability of a loss. Now, you will know this because if you are a losing trader, which, let's be honest, if this is what the statistics show, most people are losing. And even this in itself shows us there is not necessarily much truth to what you see online, because everyone is proposing themselves to be a successful trader. Yet the amount of people you see online pretending to be successful traders doesn't actually equate and add up to the reality of what the statistics show. So the likelihood is most people, even saying they're profitable traders, are not profitable traders. So when you look at this and understand what's going on, you begin to realize that all of these losing traders are being fed by other losing traders who are also not profitable and also part of that very same percentage right there. Now, why is it contributing to more losses? Well, you need to look at this logically and understand that every single time you enter the market, there is a risk of a loss, and you are more likely to lose in the markets than win overall. Therefore, the more you participate, the higher that probability is going to shift that a loss will happen. This then ends up spiraling into a rabbit hole of various different consequences. This can be revenge trading. This could be at higher levels of emotion. It's marketed to you as something that's enticing, something that almost taps into that gambling fix as human beings we want to tap into. It gives us that dopamine hit. But the reality is, once again, it doesn't actually equate to better results and actually leads to significantly more problems than positives.
Yeah, so we're not here to scare you and say that trading is impossible, because it's not. But what we want to break down is the way of trading. So as Tori's explained, everything we've got on the board here is a fact. It's not something we've made up. These are actual facts. And the fact that, 97% of retail traders who consistently day trade over a 300-day period lose. 97%, that's a huge amount of failures. That's a huge amount of retail traders not making any money. As Tori said, it's basically 1%. It's basically 1% that's profitable. So, 99% of the people who say that they're profitable traders are usually lying. The most influencers that you see on social media, unfortunately, they are more or less probably lying, because it's a very, very tough market to become one of the 1%. That is what we're talking about within day trading. Now, trading, you can be successful if you reduce the frequency of trades and have higher probability trades. But what we're going to show you today is you can reduce and not be part of this 95% or lose, and become one of the 1% that win if you stop day trading, which means trading every single day. We spoke about this before, but a massive part of trading is psychology and patience, and just understanding how, and perception on how to view the market correctly, how to have patience. And patience is to not trade every single day. If you're trading every single day, your probability of losing is huge. What you should be looking for is high probability setups. And in the social media, Forex, crypto scene, there's various ways that people talk about high probability setups. You can just call it a high probability setup. Some people call A+ setups, for example. And some people have, I don't know what it is. If an A+ is, some people call A+ a high probability trade, then what, a B setup or a C setup? But why would you even take a B setup and a C setup and enter the market with low probability trades, or just to trade frequently and to trade more, when, if you trade less and just wait for those high probability trades, that's where you're going to make the money. Real traders are not trading every day. Social media and YouTube, all social media will tell you a different story. But the truth is, the less you trade, the more you will make. And it's very hard to combat that. It's just sort of fed into us for different reasons we're going to explain, to trade more regular, to trade every day. Some retail traders jump out of bed and they're taking a trade within the first few minutes of the day. As soon as the market's open, they can't control themselves. But with trading, it really is a matter of less is more. The less you can trade, the more profit you will make. It feels like it's going against what you should be doing. You feel, the more you trades you take, then it sounds logical that more profit will come in. But if you sit back and wait for the high probability setups, wait for those setups that have like 70, 80% win rate, they don't come around every day. They come around maybe once or twice a week, if that, sometimes once or twice a month, or 2 or 3 or 4 times a month. But you can make enough from those trades. You'll make way more than you would make taking 100 of the low probability trades. But as Tori said, it's not just the actual trade setups themselves. We know, and you probably know yourselves, that with trading, it's not so much about the setups, it's about you. It's about how you behave, your psychology, sticking to your rules, sticking to your strategy. So if you lower the frequency of trades and you take 4 high probability trades in a month, compared to taking, let's say, 10, 20, 30, 40 trades. Some people, even that's on the low side for some people. Some people might be taking 10 trades a week. So if the 10 trades that you're taking a week are all low probability, you've got a bigger chance of losing in the first place. But then you add on the human factor, the trader factor. The part of trading that everybody has is controlling yourself. The more you're involved in the market, the more chance you're going to slip up. Every time you enter the market, you know, you're getting into a psychological battle with the market for most. You know, if you're taking 10 trades in a week compared to one, there's way more room for error. You know, what retail traders do, move in a stop loss, can't take a loss, so they hold on to a loss. When they go into profit, they can't hold the profit because their psychology is ruined from being in a loss on other trades. And you just have all of this battlefield going on in the market and in your mind, not even in the market, but in your mind, because you're taking way too many trades. Whereas if you sit back, cool, calm, and collective, and take less trades, higher probability, you are calm in the market and you take high probability trades, lower the frequency, and lower the possibility of a loss and make much more money. And that is not day trading, that's trading correctly. Day trading, trading every single day, leads to this 95% of losing. That leads you to the 99% that are losing. The 1% that you see here, the 99 that are losing to the 1%, they are not trading every single day. They are taking 1 or 2 trades a week, if that, sometimes 1 or 2 trades a month. And you know, you might not like the sound of that because your human instinct and urge is to want to trade more. But if the fact that we're saying this and you're not agreeing with it, probably tells you a story that, you know, you are on the wrong side of the market, where you are day trading or you are trading too much. It's a very, very difficult thing to learn, but the key to success in trading is learning to have patience and learning how to sit back and let, you know, trades that might look like they're good, but they're not high probability, letting that one go and waiting for the high probability setup. And you'll find that more often than not, the trades that you thought were as a good trade end up losing. And if you can stop yourself from taking those losing trades and just holding on and be patient for the high probability, trade less, not have the unnecessary losses, and then stick to the winners, you'll become part of this 1%.
100%. And like Bernie said, it's increasing the margin of error. You need to understand every time you enter the trading arena, whatever market it may be, there is a probability for error. And this is what makes trading so difficult. It's not necessarily that the markets themselves are difficult, but it's difficult for us to control ourselves and not make irrational decisions. A way I'd probably explain it, I like doing my analogies, is to compare it to walking a tightrope across a very high mountain with no harness, no security. You can clear it the first time, safe and sound. You've pushed your chances, you've cleared it. But then you go back again and again and again. And if you keep walking that same tightrope, you're not putting the probabilities in your favor of survival. And eventually you're going to slip and fall. I hope that makes sense. But you need to realize and also be very honest with yourselves here. The reality is most people are within this number right here. So that means not to take it in offense, but more so to understand what is it that's keeping you in this number right now, and what is it you need to do to potentially shift out of that. You must remember, as human beings, we are highly irrational, highly irrational, and we are more prone to make errors the more we try and do something again and again. The hard part about trading is trying to stay focused, trying to control yourself and trying to control positions. The more positions you take, the more you're likely going to lose, but also the more you're likely to make errors. And if one of the characteristics is the more you trade in a day and the more there's losses in that day, the more trades you will then take on top of that and spiral out of control to try and recoup. But more often than not, you're going to end up with an even deeper hole and a bigger loss. I've done that so many times, especially when I first started, where I would literally trade insane amounts of trades a day, thinking this is going to get me. And it would occasionally work. I would have a continuous streak for a certain period and then almost get sucked into this vortex of not realizing I'd end up blowing my account with even more trades after that. It's very easy to almost get consumed and engrossed when you're taking a higher probability of trades. It's also worth mentioning that actually why it can seem illogical to most people to only trade once a day, or let's say once every other day, or even once a week, is because of what Bernie mentioned. It's that perception that you're not going to make as much money. But the likelihood is the reason you're not making as much money, or the reason you're not as profitable as you want to be, is because you're losing more of those trades than winners. Therefore, even that from the offset immediately is something you can look at. If you look at your balance sheet, you look at your portfolio, you export your data, the likelihood is you have a lot more losses than wins. And that is really the reality for most traders. You can be profitable with more losses, but if it's constantly destroying you, that's what you need to be looking at. The likelihood is you have very good winning trades, but it's those silly losers that amount up over time that actually contribute to your biggest losses. So if you can already identify that and shift that out of play, you start to realize why. The reality is this 95%, they're not bad. They're not terrible traders. They're not stupid. They're not silly. They are just quitting too soon. Trading is boring, trading is slow, and trading is steady. And if you understand that every time you participate in the markets, there is a significant risk that a loss can come through, your best bet is to reduce that significantly. And immediately by doing so, you've reduced the risk of losing as much. And there's a higher chance by doing so, you're going to be more selective with your trades from the offset.
So now let's talk about something that I don't see anybody talking about on social media because it doesn't pay them to. But why is the lie, or what is the lie trading on YouTube is built on? It's actually linked down to here, brokers and influencers like we spoke about earlier. Now on social media, day trading is pushed to like trade every day, trade as much as possible. You know, it's just pushed on IG, we all know the type of influencers we're talking about, and all over YouTube. And if you notice, nearly every single influencer or trader that you see is all affiliated to a broker. Now, this is the major problem, the lie that trading is built on social media, and especially on YouTube. So what happens is a lot of these traders and influencers, they are posing as the 1%. But we've just explained how 99% of retail traders are losing and how difficult it is, especially day trading, to be part of this 1%. But, you know, miraculously, everyone on social media is part of that 1% now. But it's not true. What's happening with influencers and brokers is they are linked together and they're building a lie on social media. So as mentioned, if you watch closely, nearly every influencer that you see on YouTube or Instagram, they are all affiliated with a broker. There's an affiliation link in their bio, there's an affiliation link in descriptions. So they make content to then, you know, draw more attention, but they're all pushing a broker, a prop firm of some sort. Now these brokers and prop firms, they are dealing with the 95% of retail traders that are losing. So they need to get in new retail traders all the time. Advertisement for brokers is banned in a lot of places. So what they do is they pay influencers for the affiliation. So influencers push the brokers and they're getting paid. So every time you use an affiliation link, the person whose video or the influencer you're watching, they get paid. Whether you win, whether you lose, as long as you deposit, as long as you join a broker, they're getting paid. But then most influencers are pushing the day trading narrative and, you know, signing people up, or people are joining and thinking that day trading that you're going to make, you know, millions of pounds, you're going to be rich. But as we've just explained, 99% of people fail and they're losing to that 1%. On YouTube, you'll see that most influencers and traders have a affiliate or referral link somewhere in their description or somewhere on their page. So it's a revolving door basically for these brokers. So they need to keep getting new business. And the only way to do that is to keep doing deals with influencers, content creators. So you keep pushing and getting new business into the broker. But this revolving door just keeps going and keeps going because unfortunately, you know, retail traders will just keep losing. But it's not in the interest of the influencers or the traders to tell you that because they're getting paid by the broker. So the broker's paying them to keep getting new business in. And then retail traders are just losing money, losing money, losing money. No one cares about the 95% that are losing because as most things in the world, it's all about the 1%. But, you know, the 1% of successful traders, it's not their fault that these people are coming in. There's legitimate traders who are trading, know how to trade, and they're making money. There's A book brokers, there's B book brokers, some of them we can talk about in a different video. But it's, it's a complete lie that the whole system is built on. But nobody talks about it because influencers and traders are getting paid by the broker. Every time you sign up, every time you sign up to a broker through a link or affiliation, they're getting paid. And that's where most traders are making their money from, not actually from trading at all. But obviously, we're not trying to scare you and say that you can't make money in the market. But what we're trying to explain is if you stay away from the day trading side and learn how to trade properly and have low trade frequency, your probability of a loss will be removed and go down, and you'll be making a lot more money.
So the unfortunate aspect of the world we currently live in is that everything's becoming more content-based, more creator-based. And we live in this horrendous world where we have this creator economy essentially now. And you'll quickly notice that the biggest names or faces in trading are not necessarily the best traders or the most educational. In fact, there's very little value left in the sector these days. But what they're the best at and why they're the biggest is the content they create. And this is what's also in some form of almost a conveyor belt of some sort. Why this metric and number and data doesn't ever change. Because the more new people get introduced to trading, this is their first basis of introduction to trading. It's day trading. Basically, it's a business like anything else. The brokers are in the business of making money, and the content creators are in the business of creating content for money. And that's what they've built their content off. So no one here's a bad person, but we're just telling you this is how it works. And of course, this is why there's always new videos all the time, this new day trading trick, this new day trading strategy. It's constantly evolving because eventually you have to keep up with new things to keep people entertained. If you were to just constantly say that trading is boring, you don't really have much to talk about after that. Therefore, you have to keep whipping up these new strategies and tips and tricks. That's the reality of it. And if you then understand that, you then begin to understand a bit deeper why it's being pushed to you. If you understand that everything is based on likes, interactions, retweets, etc., and for general engagement, you will realize why a lot of this stuff is being pushed on you. But it doesn't mean it's for your best interests, and it doesn't mean it's the best thing for you either. You could even compare this to a lot of the new streamers you see. Everyone's now being pushed by gambling companies, and you'll see multi-million pound deals. This has become the new craze now, and kids are literally being pushed to gamble. We're in this hyper gambling era of society, and trading just taps into that perfectly from the day trading aspects because it sells a lifestyle. The crazier the lifestyle, and again, the crazier the material items you see, there's more money in broker affiliations than there is in anything else. And that's obviously a self-fulfilling prophecy at this point. But it taps into that same urgency. You see the fast cars, the lifestyle, the idea of trading everywhere you want at any given moment in time. Of course, it's going to tap into us because it's sexy, it's appealing. Everyone wants to live that life, but trading is not actually profitable that way. Or at least it isn't for the foreseeable future and for longevity purposes. In no way, shape or form is it not possible to make a lot of money quickly in trading, but the idea is the longevity aspect diminishes the more you trade. That's what most people forget. I flipped many accounts in my life, and besides the ones where I've managed to withdraw the money and spend the profits, most of them have been blown from trying to flip accounts. That's the reality of it, and that's me being honest. It's glamorous, it's cool, but it doesn't last very long, and trading is a game of survival. And day trading in this manner, frequently, is not going to ensure your capability of survival in this game.
Yeah, there are very, very, very few day traders who trade every single day who make money consistently. Some of the richest people in the world, none of them are day traders. Yes, you can make money in trading. We make great money in trading, but our trades can be 1 or 2 a week, or 3, 4, 5 trades a month. But it's selective trading. It's not trading every single day. Just zoom out of the charts a little bit and just think about it realistically. Is there going to be great opportunities every single day? No, they don't come around every single day. Otherwise, everyone will be making millions, and it would be that easy. The good opportunities and the high probability opportunities come around every so often. Once a week, once every couple of weeks, you might have 3, 4 trades a month. But some of the best traders in the world, they might only take 1 or 2 positions in a month. But those positions can make, 10, 20, 30% or more. Day traders think they can make more money than that by taking multiple trades every day. But it's never going to work, or, it's very, very slim chance that it's going to work. Again, these are facts. We're not just saying this, but if 97% are failing at day trading, that's, the results are there in front of you. So that can make you see, okay, I need to stop trading every day. And I promise you, when you do stop, you'll start realizing that your results get much better. Again, the brokers have to disclose that 70 to 95% of retail traders in general lose. This isn't even a day trading figure. This is just retail traders in general. Even most retail traders who might not trade every single day and might, you know, be able to control themselves a little bit more, but they're still losing. So it's a difficult game, but the profitability will come from decreasing the amount that you trade, taking those high probability trade setups. Talking about analogies, Tori had a tightrope analogy. One analogy I like to sort of talk about, discuss, I'll just clean this up a little bit. A lot of people call trading gambling, and it is if you haven't got an edge and if you don't stick to a set of rules. But when we talk about, you know, high probability trade setups, the way I look at it is, if you can imagine being in a casino and there's a blackjack table here that on top says there's an 80% chance of winning, and there's another table over here that said there's a 20% chance of winning. Now, this dealer at this table will only deal a hand maybe once a week. Let's say, for argument's sake, let's compare it to trading. But this dealer will deal a new hand, like a normal table. Every 5 minutes, there'll be a new hand being dealt. Just look at it from this point. If you know that there's an 80% chance of winning at this table, but you're only going to get one hand a week, or let's just say 2 or 3 maybe in a week. You don't know how many it'll be, but if you sit at that table, you might get 1, you might get 3, you might even get 4 on a very good week. But if you can sit at this table and get a hand dealt every 5 minutes. If you look at that, what table are you going to go and sit at? Are you going to go and sit at a table where you know there's an 80% chance of winning, or are you going to go and sit at a table where there's only a 20% chance of winning? If you look at it like this, most retail traders are sitting down here. They're taking trade with only a 20% chance of winning, and they're losing. They might get the odd win because there's a 20% chance, and that feeds into their gambling addiction. They're thinking, oh, well, I took this trade and it won, so I'll go again and I'll go again. But, over a long period, we said about 300 days, but over a course of a month, there could be maybe, let's say 30, 40 trades here, and there'll only be a handful of winners. But that handful of winners is almost like in a casino. It gives the gambler or the addict, enough to keep coming back. It's like bait. It's just reeling them in, just giving them enough to keep them coming back to keep playing. But I mean, if you know that there's an 80% chance of winning and a 20% chance, why would you even go anywhere near that table? This 20% is the low probability trade setups. Like, why take them? Why even bother? Why even sit down at the table? Why even sit in front of your screen, basically, and take any of these? When you know that there's 80% probability trades out there, but you just have to sit and wait. You have to sit in front and you have to wait. You might get 1 a week, but you might get 3 a week. Who knows? You might get 1 a month. You might get 6 a month. But if you know that there's an 80%, a plus 80% chance of winning, then why would you not just sit here, be patient and wait? Because humans can't control themselves. Unbelievably, most will sit at this table and keep trying to beat the house, try and beat the dealer, try and beat the broker, even though they've explicitly said only 20% will win here. Now go back to what we said a few moments ago about the disclaimer. At the top of the website, any broker, any regulated broker will have a sign saying that 70 to 80%, like we had a moment ago before I rubbed it off, 70 to 80% of retail traders lose. So, take away that 70 to 80%, it's even 70 to 90%. So 80% lose. So that means there's only 20% chance of winning. So if you're taking day trades, you're going to be part of that 80% that lose. But if you can stop yourself from doing that, sit at the table where you might only get 1 trade a week or 2 trades a week, but high probability trade setups, you can be part of the 80% that end up winning. You can make money. That's how you make money, by trading less, doing less, and making much more. Not being part of the 8% that lose, trying to take those 20% trades that just hardly ever win.
I want to add to that because that's actually such a good way to visualize it. And the reason, if it's true, if you were to look at that right now and that was what you were presented on your screen every single day, let's just say you open TradingView and it shows you exactly this, but for trading. It says there's an 80% chance of winning if you just sit back and a trade will come whenever it comes. Or there's a 20% chance of winning, but trades will be distributed every 5 minutes. If that was present on your screen, you would 100%, I hope, go for the 80% chance. But when we go onto our screens every single day, the issue is of why this isn't truly visible to us in trading is number one, because it's not disclosed, but number two, because the markets are given the appeal of a never-ending opportunity. And it's what we said at the very beginning of this video. In our minds, because of, in all honesty, brainwashing from the content that is consumed, we just believe that every trade is an opportunity to make money, but no one looks at the consequences of that trade not working. And of course, the frequency of those trades increasing the probability of losing money. But if you actually were to look at the markets on a daily basis and understand instead that there's actually a risk you're going to lose, even that in itself would help you diminish that probability. That's really one of the core issues here, is that people look at the markets and think, how can I make money today? How can I make money? But no one's looking at where's the opportunities that increase the probabilities of making money. Because most of the opportunities every single day are more likely to lose you money. And when you realize that, it will help you perceive this. And if anything, I'd actually really recommend, because it's even just clicked in my head, to look at that and think about that before you enter a trade, or even when you open your charts, whenever that may be next.
And just on that analogy, this is sort of like a blackjack, or I like to think of, I don't play poker, but I like to think about trading in a poker mindset sometimes. Is because, again, but if you think about poker, and this is a great way to, moving on to the next, probably final part of this video, showing you how to combat the day trading, how to stop taking those trades. Because it is very difficult. We've all been there, we've been, taking day trades and ending up in that rabbit hole and just losing eventually again and again and again. So it's only, through experience that you learn. But, we want to teach you how to get out of that. And a good analogy is, again, thinking about poker. Think about being in a poker game with the charts. So the charts, you've got high probability trade setups. What's high probability in poker? A pair of aces. What's a low probability trade setup in poker? Like a pair of twos. If you keep betting on a pair of twos, you're going to lose. Just like a low probability trade setups in trading, keep betting on them. You've only got 20% chance of winning, like a pair of twos, but you're going to eventually lose. But if you're playing poker or you're trading and you sit back and you're patient and you wait for a pair of aces, you wait for an ace king, you wait for a full house or a flush, etc. If you're waiting for the best possible cards you can get dealt, which is a high probability trade setup, that's when you bet bigger, or that's when you go into the market and risk your capital. Folding trades is a very, very big part of being successful. So if you're trying to decrease the amount of trades you take, see it as a game almost. When you see a trade setup that, sometimes we've all been there, I'll take this just in case it plays out, but that's the one that ends up blowing your account, or you lose a big on because you took it because you shouldn't have, it didn't fit your trading strategy, you took it because you just didn't want to miss out, then you held on for it for too long, lost too much money, couldn't suffer taking the loss, end up blowing accounts, etc., etc., etc. We've all been there. So if you can treat it like a game, and then every time these low probability trade setups pop up, just take a look at yourself, think, what am I doing? What is this trade? Is this trade a pair of aces? Is this an ace king? Is this a flush or a royal flush? Whatever, I don't play poker, but think about that analogy. When you're about to take that trade, think, is this a high probability trade setup? Is this something that you're not ever going to do it, you're not going to risk more than 1%, but is this something you would go all in on? You have to have that conviction of a trade. But when on a day-to-day basis, if I'm watching a chart waiting for a high probability trade setup, which is often waiting for price to reach a predetermined area. What most day traders do is they're just watching a chart and watching fluctuations on the lower time frames and thinking that there's a trade. But most high probability trade setups come from analyzing the charts, marking out areas where you want price to get to. Then when price gets there, that's when you see what the market's doing and see, do you have a pair of aces in your hand? And then you bet. That one silly trade We've probably all been there. It could lead to you blowing an account because the psychological battle that you start having with that. Wait for the best hand that you can get. And when that comes, then go into the market.
Yeah, I would also say for myself, and something I often do when I feel a little bit out of sync with the market, or I feel I've had a losing streak, and I slightly touched upon this in a video when I did have a losing streak, which was last year now, I believe. And I had like a 7-trade losing streak. And one of the things I do immediately is almost take a simulation trade and a demo trade. Now, the key behind this, first of all, especially if you do not agree with this, or you're not yet conscious of the fact that day trading is probably a contribution to your losses. The reason for that is because if you're being told that, you know, you've got the winning formula now, this is what the winners do, you're not actually going to blame the losses on yourself or on day trading or a high frequency of trades. You're likely going to blame it on the market, manipulation, and a whole bunch of excuses. The first thing you want to do is become conscious of what is contributing to the losses and how many trades you're actually taking, because more often than not, you're not going to be aware of how many you're taking until the account's already gone to zero at that point. And what I often do when I feel out of whack with the market is actually continue every single day like normal for a week, but I don't take any trades. And what I do is I pretend to take the trades mentally in my head. I will do my analysis as normal. I will do everything exactly the same. I'll even set up an RR tool, but I won't take the trade. And I'll actually just make a mental note or jot it down somewhere or take a screenshot of what's happened throughout that duration, of what I would have done in that overall week. And more often than not, most of the trades end up being losers. And even doing that immediately tackles the first phase of the problem, which is becoming aware of where things are going wrong. It not only helps you identify, if you pay attention to it and learn from it, why you took that trade. The reason behind this is quite psychological. It's because you're more willing to take trades out of impulse. When you're in that losing streak phase, or even if you're just over trading, there's not that many opportunities in a day, let alone in a week, to make good opportunities and good money from the market. But the more presence you spend on the charts, and the higher the frequency of trades come in, the more likely you are to just start taking trades for no reason. Opportunities that are not opportunities begin to look like opportunities, if that makes sense. And I often like to trick my mind and just go about my week as normal, pretending I'm trading, then looking at the results at the end of that week and then going, oh, okay, that makes sense. Why did I take that? And in a way going, thank God I didn't continue trading, because especially if you're in a losing streak or you're almost at that, what was 95% metric on the board, you're going to start realizing why it's actually happening. And that's one of the key things to do. If you identify the problem, you can then learn how to fix it. Everywhere you look, everyone's a successful day trader that's trading several times a day on a 5-minute, 1-minute, 30-second time frame, doing all sorts of crazy things, making thousands. You're almost subconsciously embedded to believe that's how you make money. And it can feel wrong to take less trades. But actually, the first thing you should do is, within that first week, take no more than 2 trades. See how things go. And what that will immediately do is almost tricking yourself into believing that if you take more than 2 trades, you are committing a crime or a sin, or that something horrible will happen. It sounds crazy, but if you convince yourself that taking more trades than are necessary, treat it as do or die, basically, as if you take more than 2 trades, something bad will happen to you. I know that sounds crazy, but if you do that, you're more likely to be selective. You're more likely to then put effort, quality, and also question, not overthink, but you're more likely to place a stronger focus on those specific 2 setups. And I guarantee you, even taking 1 or 2 trades a week, if you are someone that takes 10, 15, 20, 50, or 100, you're going to have better results. You may not be immediately profitable, but you will also have less losses most likely as well. Even if the immediate effect is less of a loss, it's still better than a significant amount of losses. People forget that.
Very good point.
It's not just about, let's just say you end up losing 10% in a week from over trading. Well, even if you end up losing just 2% in that week of trial, you have made the biggest improvement of your life, and you are now 1,000 steps closer to getting to that goal. Over time, and over a month or so, I would then slowly increase to maybe 3 trades a week. And this is where it gets scary, because your mind's probably already thinking, shit, 1 week, 2 weeks, this is taking too long. How am I going to make money in that window? And this is what traps most people with the content that day traders make. It's that constant urgency. And I know a lot of people probably have done that calculation in their head immediately. I can't wait a month for these results. I want to trade now. I want to make money. We all do. But that's what trading taps into, and that's what causes 95% to lose. It's that constant fixation. If you do this properly, this is almost a factory reset that can be embedded into you. over time. You can slowly increase over time. And what that means is if you start going up to 3 trades a week, and then maybe a month later doing 4 trades a week, I guarantee you'll likely be profitable at that point. But what it will also do is teach you a great learning curve, because you will then be able to see exactly what the results difference was as you increase and decrease the trades. So if you start off at the lowest level and gradually increase over time, you're going to have a great set of data. You may find the sweet spot for you is 4 trades a month. It could be 10 trades a month. But as long as it is less than what you're doing, and more likely the high amount of trades you're taking is contributing to losses, as long as the frequency is reduced and you do this through a series of testing, it could even be a year long. But that year would be the most beneficial year of your life when it comes to trading, because it would save you another 10, 20 years of losses if you were to stick around that long enough. It is also worth mentioning why that 95% are categorized as losers is because they quit. They aggressively go in day trading hard and hard. They try all the different strategies. They do all the different signals and it doesn't work. And then they quit and give up. So that metric is really factored in mostly for people that give up too soon. But if you're able to withstand and survive the process by reducing the frequency of losses alone, you will be here for a very long time and you will get to the road of success significantly quicker.
Yeah, so some very, very good points made there. And I think just to finish off on this is you need to be able to be at a point where you could not look at a chart for a day or not look at a chart for a week. You know, I've been there, we've all been there, where you're trading. Sometimes you can end up taking 10 or more trades in a day. When you're day trading, everything looks like a possibility. And then it's only when you blow your account, then you're not trading for the next 2, 3, 4 weeks because you have no money in your account. But most retail traders, when they have money in an account, they can't stop themselves from taking a trade. It's like a gambler's addiction. When there's money in their account, they need to take a trade. But if you've got a lot of money in your account, whether you've been losing or winning, if you've got money in your account, can you step away from the chart for a day? Can you step away from the chart for a week? Could you even do it for a month? If the answer is no, then you probably have a problem. You know, can you go on holiday in the summer and not look at a chart for a month? Most retail traders can't. They just need that fix. So if you've got that, that's the issue. And like Tori said, you know, if you do scale back, you might find a sweet spot where you have 4 trades a month. But remember, use the poker analogy. Wait for those pair of aces. If you say, I'm not going to take a trade until I get the absolute best possibility, you're going to reduce all the losses, you're going to reduce all the stress. You might not win every single one because those 80% probability trades still have 20% chance of losing, but you're going to reduce all your losses, which is much more profit straight away. And then over a period of time of a month, 2 months, 3 months, you're going to see the probability build up. And you're also going to see yourself develop as a trader because you won't be stressed, you won't be stressed out, you won't have anxiety, you won't have the psychological issues that come with trading, where you're just, you know, chewed up and spat out by the market, like the 95% that we had drawn on, and part of that 70 to 90% that brokers tell you are losing by day trading. Be able to step back, be able to step away from the screen, trade less, wait for those high probability, sit at the table where there's the 80% chance, not at the table where there's only 20% chance. Less is more, and it will make you successful, and it will make you way much more money in this market.
As with every video, we recommend trying this at home. At the end of the day, if you are part of the 95% that lose, or you are even just currently having a losing streak, you really have nothing to lose by giving this a go. It can seem detrimental, it can seem very difficult, but I guarantee you, if you get over that first difficult hurdle of even being able to withhold from trading, you're making more progress than the 95% of people that keep losing. So even that in itself is the biggest first positive step. It's trial and error. More importantly, that's the key to all of this really. If you are losing and you're trading too much, reduce the frequency of trades. And that in itself will begin to make the greatest of differences. So as always, if you did find this video valuable, please like, subscribe and share.
We'll see you on the next video.
See you in the next one.